All right, so let's just get right into it. Today, I kind of want to spend some time talking about 5Cs because a lot of people hear 5Cs, but more from real estate brokers or banks just advertising it.
Wait,
but I feel like
what's 5Cs?
5Cs is basically the concept that a lot of financial institutions go by in terms of assessing whether a person is credible or not worthy. The worthy is not the word, but it's like is suitable for a borrowing need. And
Okay.
So simply put, speaking in English terms, it's like when I worked at the bank as a banker, I follow the 5Cs as a policy to see whether or not you, Alex, will be someone I want to lend money to. That's basically how it is.
Got it.
And
so it's not like the diamond Cs.
No. Bro, you just got married. I understand you're familiar with the 5Cs, but chill. I don't need to learn those stuff.
Got it.
Yet. No, and the thing about the 5Cs is that I feel like a lot of people don't think about it because we're at the end of the day, financial borrowing, we always think we're really zoned in on one element and think as long as we're good on one end, the bank should lend us money. So for example, a lot of times people think, well man, come on, I make 150 grand a year. I got so much money. I'm just borrowing $5,000. I can easily pay that off. Why won't you lend money? Why won't you lend money to me? But it's not that simple. The 5Cs is they're interconnected. Those are all elements that need to tie together. You can't just be good at one thing but suck at all four.
So you gotta be pretty well balanced.
Yes.
That's what you're saying.
Exactly. So I'll cover all the 5Cs today. So 5C, there's character, there's capital, there's credit, there's capacity, and there's collateral. So we'll go through each one. Character usually, and this goes back to the first video we talked about with the banking relationship. Character, I don't know your character unless I've known you for a while. So same thing goes towards any kind of financial institution you do your business with. If you don't have a relationship, I have no history to base anything on. Like, do you deposit money regularly with us? Are you a good customer with us? What has your experience been with us? I don't know anything about you. And it takes time. And that's why earlier on, I was like, the minute you're ready, go get a credit card, go get a banking relationship, set something up because it takes time for someone to build some sort of relationship with that institution.
Gotcha. But character, do you have to build a relationship, or is that more is that based on a personal relationship, or is that just based on your relationship with the bank, your behaviors, products, activities?
Traditionally, when I say traditionally, I mean this is only something that's applicable 6 years ago. I would say based on personal relationships, because a lot of things back then, data and technology wasn't as advanced back then. So a lot of things was based on how the personal banker vouched for you. The personal banker said, you know what, I've known Alex, loyal customer for 6 years now, yada yada yada. But now that technology has advanced a lot of data points, naturally, the way the bank systems where they can actually they keep track of your transaction data, see how you mobilize your money. They can assess based on certain data, certain algorithms, whether or not you actually are a loyal customer.
Gotcha.
So those are that's a big thing for character, because a lot of times some random person will come into my branch. I still remember it's I want to borrow money from your bank. And I'll be like, okay, do you have a relationship with us? They're like, no, I bank with the bank across the street. I'm like, okay, so I don't know anything about you. And they're like, yeah, I make this much money though, so I need to borrow $10,000. I need to get a line of credit for 10 Gs. I'm like,
nah, bro.
No, but are you I literally had to sit that customer down. I'm just like, pretend I'm not a banker. Pretend I'm just a random stranger. I literally do not know anything about you. You just walked in. For starters, you assume that I will believe you that you make that much money for. You have no document, nothing to show it for.
Yep.
So where do you think what makes you think I will actually believe you though?
Yeah.
That was the weird part. So character,
Gotcha.
that's a huge thing.
So you gotta treat the banker, like a human being.
Exactly.
And then you gotta develop a relationship.
Yes.
And that's the advice you would give.
Oh, absolutely.
Gotcha.
I might not be going the same order I listed it, so bear with me. Let's talk a little bit about capacity, because a lot of people are zoned on this one, and I think that's a big one. And capacity amongst the 5Cs, I personally feel, is probably the most important one, and it's basically the ability to repay. So in short, capacity, I just tie it back to income. Do you have the capacity to pay it back? So if you're on a monthly basis bringing in $10,000, number sake, you bring in $10,000 gross income, but the amount of money you want to borrow right now, on a monthly basis, you need to pay back $15,000. Do the math right there. You're not making enough money to pay back your debt. What makes you think I will lend you that money? On the other way around, But if you were making, let's just say, $10,000, but you only want to borrow something that will cost you to pay back $2,000 per month, from a capacity perspective, it makes sense. Okay, you can handle that debt.
Yep.
And the banks, or I think this term is more commonly used across all North American institutions, is TDSR, total debt servicing ratio. So it's basically saying, I'm going to assess your entire portfolio. So it's not just looking at the specific debt you're borrowing from, it's looking at all the debts you have. So that comes from like looking at your credit report saying, okay, you have a credit card, you have a line of credit with this, and then you have your gas, utilities, your regular housing expenses, all that, and then this piece of debt. When we add this piece of debt along, what's your total capacity? Can you handle this piece of debt? If you can, usually the range is like the total amount of debt it should take up your income should be around 40%. That should be like a safe benchmark where a lot of companies will feel comfortable lend money. That's not always case by case, by the way, but 40% is usually the benchmark they go with.
Okay. So it depends on your income, on your expenses for your household, and also on the other debt you have, which I guess is including expenses. But do you treat that differently?
No, they're treated the same way, but some people don't think about it the same way. Some people think credit expenses are just credit card debt, line of credit, loans. They don't think about, think about it this way. What are essential debts you need to pay for to survive on a regular basis? So you need to pay for heat, you need to pay for utilities, you need to pay for property tax if you're a homeowner.
Yeah, and don't forget about bubble tea.
No, I'm not. No, the Boba trend is not coming in our video.
Okay.
No.
Okay.
All
right, you're a hater, I see.
No,
I think we can move on, but
I just hate how Boba just out of nowhere blew up when it's been something that we've been having as kids. I don't know who somehow made Boba a bigger deal than it actually is.
Right.
And now, by the way,
this is a conversation.
I'm parking
a whole other video we should make.
And Boba is it's not a category of drink. Boba is the thing in the drink. By the way.
Right.
You just triggered the crap out of me.
It's a bit of a.
This is not. We're not even on script right now. You literally just triggered me with the Boba comment because I literally on my Facebook everything's just about Boba nowadays. I digress. Okay. Third C would be credit, and this is so common sense. Like, that's what. And like in other videos, I'll tie into like about applying for credit card, building a credit, and all that stuff. But think about it this way. This kind of goes back to my point with character, and when you're building credit, this is something that the banks or whoever leverages to see, hey, is this person a credible person? Is this someone that I can lend money to and will repay back? This is basically your report card to go to any institution and say, I want to borrow money. I may not have a relationship with you yet, but this is basically a report that shows, am I a credible person? And that's really important. And that's why I always highly encourage people, pay your debt on time. If anything, pay it before the deadline. It's okay to have more than one credit product. Some people are just like, no, I don't want to get my credit hit. I don't want to apply for another credit card. It's okay, like, to a certain extent, have a few more credit products, because if I look at Alex, he has one credit card with a credit limit of $500, and that's all he's managed and handled and paid off.
Well, don't expose me there.
No, shoot. I'm sorry, man.
I think it's about 700, but
oh shit. So think about it this way: if you only manage $700 worth of debt, you pay it on time. I don't care, but that's the only capacity that you've really handled. Rather, for someone else, I'm not gonna say myself because I'm smart at this way. Someone that has $15,000 worth of debt, and they consistently pay back on time. And from a credit report, from a data perspective, this person has much more debt capacity and is more managed. Is managed better than someone with a lower. So it's okay to expose yourself with more credit as long as you're able to handle it. And if you are able to handle it, your credit score will reflect. And the banks really care about that credit score. And that is one huge thing where they say, like, so think about it this way: if you have amazing capacity, you make big bucks, low debt, you just want to borrow short amount of money, but your past tells me whenever someone lends you money, you go default on them.
Right.
And that's what I mean.
That's no good.
Exactly.
But does credit make up for your lack of character or the lack of relationship in the bank?
To one extent. Okay. Like I would say it does. In some way, because again, banks are hungry for business. They want you to come in. So like I would want Alex from the across the street bank to come over. Even if he doesn't bank with me, I will give you a mortgage. Like do business with me. And the only thing that will give me the best assessment of your character would be your credit report.
Gotcha.
So it does make up for it to one extent, but again, I would say a lot of times, if let's just say your credit and your capacity is not there, your character will boost up. So do you see what I mean? Like they're all interconnected. They pull one another up where you're lacking. They pull it up, but you can't rely on just one factor.
Okay, so if we make a comparison, would you say credit report, your credit score is similar to, let's say, a 5-star on or review on Amazon, and your personal relationship is whether you bought from the brand before, so you know how it's like?
Yeah, fairly comparable. That's a pretty good analogy. I was almost say like it's almost your Amazon account is your character, your 5-star rating is the credit report. Like those stars is basically telling me how credible you are. Your past history, how frequent of a shopper you are, and all that stuff, and how good were you as a merchant, like vice versa. That relationship, that's your character. That's what people can base how to assess you as a person.
Okay.
So that's the did. I'll save collateral for last because that's usually not the most applicable one. I'll go with capital now. Capital is one thing that, again, a lot of people apparently don't care about too, which really bothered me. Capital is basically how much equity you have, how much savings, how much.
I care about that a lot.
You'll be surprised. A lot of people actually don't. So people will come in and say, so you're gonna hear me use this example, but I make 120 grand a year though. Why won't you lend me money though? But I'm like, you've been making 120 grand for 2 years now, and you don't have a single dollar in your savings account. And when I look at your transaction history, every paycheck that comes in, you blow it to the dime until your next paycheck. So in my perspective, it's like, okay, let's think about it this way: someone that has no capital, what's the biggest risk to me as a borrower? But what if you lose your job?
Yeah.
You have nothing to fall back on. Yeah. And people don't agree with me. I have customers actually throw stuff and yell at me and say, "What are you talking about? What do you say? Why I won't make more money?" I'm like, but you guys always think from a very no trouble, I'm invincible mentality where I will never get laid off.
It's like the best case scenario.
Always think of best case scenario. But as a borrower, I need to think about worst case scenario. Like, what if you lose your job? Like, you can't pay me back. Like, but you have no savings to fall back on. And that's why, and this is not official, okay? This is my personal benchmark. Is, let's just say if you're coming to me for a loan,
okay,
and you want to borrow $5,000, I would say at least have 20 to 25% of the amount you want to borrow as equity readily available.
Wait, when you say equity, does that if I have a house, does that count? Or if I have a car, does that count?
House, car, those are, like the paid off portion of your house, and if you're financing it, it doesn't count and all that. Okay. Like the parts that are equity to you, it's asset to you. Parts that you own, preferably as liquid as possible. So what I mean by that,
stocks, right?
Stocks, cash, mutual funds, all that stuff as liquid as possible. Because if I think about it, if you right now owe me $5,000 and you suddenly lost your job, the first thing you're gonna think about is not just sell your house, sell your car. You want to dip in something a little bit more liquid first, right? Because if you sell your car, well, you just kind of chopped an arm for the sake of paying off a debt. Yeah. You want to have liquid cash where it's like, okay, you know what? I just won't go on vacation. Liquidate is selling off.
Easy to sell off.
Easy to sell off. Right. So you would want to think about the fact that, hey, like, I will just not go on vacation next year. Yeah. But I just need to quickly grab $1,000 and, at least take care of the next next 4 or 5 payments. Yep. You want to have that ability to do that. And banks want you to be having that level of capital because it shows discipline. It shows that you are financially responsible. And then again, it ties back to character of how you manage your money. Yeah. The last C, because I think that one a lot of people don't care about, is collateral. And it's sometimes it's actually a way to borrow money that people don't think about. So collateral applies a lot when it comes to buying homes, where I'm going to lend you money in exchange. I'm going to hold your property as collateral, meaning collateral means you're putting a stake on it. Like it's basically put on hold. If you don't pay your debt back, I basically call dibs on your house. I'm securing it.
Are you taking all of it?
No, it's basically taking up to the amount I lent you. Okay. If you paid it off and so forth, that's parts you own. That's your own equity. But parts that that's still outstanding. Yeah. Then if I have a collateral on it, I can basically legally sell your house. Oh. Okay. And whatever the proceeds come back as, and usually they obviously sell it at a lower price because they want to sell it as quickly as possible. Yeah. As long as it covers my portion, whatever equity is left is yours. That's a way of banks being secure. So that only applies in most cases, real estate. But what a lot of people don't realize is, although not a common practice anymore, and again, like I encourage you all to talk to your banker and see if that certain institution even provides this service. And that's putting money as a collateral to start building credit. So this goes back to in the very beginning, character, credit. Like, what if I'm a newcomer to Canada and I have no money whatsoever, no credit whatsoever, but all I have is cash. But I really want to start building credit, and this bank won't just out of nowhere lend me a credit card for $500.
Right.
So in exchange, I had plenty of capital. So what I'm going to do, I'm going to give you $500 collateral. Basically say, hey Alex, hold on to this $500 and give me a $500 credit limit credit card. If anything happens, you at least will know that you have $500 to pay off this debt. I will never owe you money, but I just want to have an opportunity to build credit through this credit card. And it's basically securing a deal.
But is that like you have to put 500 to borrow 500? It almost seems like the only point is to build your
exactly there is. So collateral is an avenue for a lot of people. So a lot of people because again you don't have your this happens mostly with newcomer to Canada. You come to Canada, you have no character built up yet with a profile because you just came here. Capital, sure, you may have already found a job. You have some capital, but you have no credit though. Gotcha. So amongst the 5 C's, you're already falling behind on 2.
Yeah.
So capital, sure. Let's just say I've just moved to Canada. I'm holding a few $100,000 to kind of come here, settle in, buy a house and all that. Great. You have capacity. You have a good job. You want to pull in a 3rd C, which is collateral, and say, hey, I have plenty of capital ready. Let's just not plenty. Let's just say I have the bare minimum at least. I have $500, $500, $1,000. Let me get started on building credit. And I urge anyone that is lagging behind in credit to use collateral as a way to build their credit. Because I think about it this way: like if you wouldn't lend me money for out of nowhere with no some sort of guarantee, some sort of protection. If I give you say, hey Alex, at the very least, if worst case scenario, you can take this money.
Gotcha.
So essentially, what I would say about collateral is that it's really important, especially for those who are lagging behind in a lot of the other C's like character or credit, to open up a bit of your capital to be secured by the institution or the bank, whatever. I'm just gonna call for simple bank going forward. Just the bank. I'm assuming so. Yeah. Just give it to the bank in terms of like a secured deposit, like a hold, in order for them to open up some sort of credit product for you in the form of a line of credit or a credit card, and that way you can get started, just like a baby steps along the way to build your credit. After a certain period of time, usually I would say the benchmark is at least 1 year. Very rarely under a year. Most common cases I worked with were probably 2 years, where afterwards like, hey, Alex, it's been 2 years. The $1,000 hold that I put on your account in exchange for the $1,000 credit card, you've been paying very consistently. I'm just going to do a reassessment, and then afterwards they would probably pull a credit report.
Yep.
And it looks good. They release $1,000 for you, and now you basically can maybe even apply for like, hey, you know what? Since I have such a good credit score or do blah blah blah, can I apply for a credit limit increase? And usually I've seen some successful cases up in there. So that's basically the 5 C's. That's all I can say about the 5 C's today. Is it's not just one thing that you got to work on in life. Yeah. A lot of things is about, like, when it comes to building a relationship with the bank, you need to do your part in terms of making sure you cover all your grounds, because a lot of people miss out on a lot of the other C's and just focus on one. And when the times it comes to borrow money, and what really sucks is that they want to borrow money at a time where there's no other routes possible.
Yep.
Like buying a house.
Yep.
You found the dream house you want at a super good price.
Yep.
Cool. Let me go try to get a mortgage approval right now. And then you realize you have, because remember I said this I said this on the side before too. Credit doesn't build overnight. It takes time. If you're falling behind on credit, well shoot, bro, like you're stuck in the rut.
Yeah. For
Capital,
sure.
All your money goes towards down payment. See, sorry, let me clarify this one thing. When it comes to buying a house too, it's totally understandable that after the down payment, your capital is zero. I understand, like the bank, but at least you saved up the capital. You've saved up the equity need for down payment. So it's like, okay, if you have no down payment, your bank account is zero. That doesn't mean, oh, this guy has no capital. Don't get me wrong. So that's not the case here.
Okay.
If anything, having the down payment ready and all that stuff shows that you have saving discipline.
Yeah.
Okay, so that's one thing. But one key thing is though, banks do ask where your down payment came from though. So if your capital appeared out of nowhere, that doesn't count. Like, if Alex today just writes me a check and say, yo, I spot your down payment for now for $100,000, cool, put the down payment down, but that doesn't reflect anything about my capital, about like my willingness or discipline to save.
Yeah.
So that's I mean, if you want to just pay for my house, that'd be sweet.
Sure, if I'm rich.
if this takes off. We need your support, guys.
Exactly.
Subscribe to our channel.
Is this the
Is this the part where I hard sell people? Yes, absolutely.
Okay, got it. No, but I want to just kind of recap first. So I know 5Cs, it sounds very technical, but essentially it's about building and managing a relationship with your bank, whoever it is, or with your banker, right? And managing your finances in a way that shows you have responsibility, whether it's paying down your credit cards or saving some money for the capital.
Yep.
And then the collateral part is talking about how do you actually get up to some credit if you have none.
Yep.
Right. So I think fairly simple if you just practice good financial
behaviors, discipline.
Yeah.
See, well, maybe we'll save this part for another video that we'll shoot later today, and it's about capital. You touched upon a good point, like it's when you exhibit those behaviors, like how do you do so? Because I think a lot of people don't know how to. They're like, well, Matt, you don't understand my situation. Like I make, let's just say, on a bi-weekly basis $1,500, but I need to pay rent, do this, do that. I don't have the ability to get capital. I'm not saying that's false. But I've also seen a lot of cases where a lot of people, even just saving as low as $10, $20, $50 per paycheck, it adds a long way. So, to your point, I'm not saying if you guys recap Alex's word, he's gonna say like as long as you save X dollars, that equates to capital. It's a behavior, and banks can see your transaction histories. They understand if you have that discipline. I can see how many times you put money into your savings. Obviously, how many times you take it out too. Yep. So it's that behavior, and we'll go into that in another video where we talk about budgeting and how to manage your finances in that aspect. Because I think I think capital is a part that a lot of people are not cognizant of. So we'll save that for that. But I like the way you touch upon that point.
Cool. Let's do it.
Yeah, and then collateral. You want to sum it up?
Collateral, yeah. I think if you're a newcomer to Canada especially, it's hard to, I remember my parents coming here, it's very hard to borrow money for anything, right? Like they wanted to start a business, they wanted to maybe buy a house, and everything was just tough back in the day.
Yeah.
And I think, and we didn't really understand about credit cards, so it was tough to get started. So I think collateral is actually a great way for you to have, if you have some money, to get familiar with credit cards if you're not, and to build up your credit in Canada.
Yeah. No, that's fair. Alright everyone, thank you for watching Average Keeners. We hope you liked that video. If you really liked it and really want to show us your support, click that thumbs up button and also click the subscribe button for more content to come. And of course, we really appreciate your feedback. We're still really new at this and we really want to do a better job to service the stuff that you guys want to learn more about. So please, give it all in the comment section below. We definitely will read it. So looking forward to hear more from you guys. And obviously check out our all videos in the Average Keener channel.